Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to talk a bit about the potential of the Yukon to really get things rolling this summer.
What do you think will be the Yukon surprise this year?
I think the big surprise this year will be that Snowline Gold Corp gets acquired by a gold producer, and that won't happen until after it updates its value resource estimate, which it expects to be able to do by the end of April or early May. Now, Snowline lurched onto the scene in 2022 when it drilled the first discovery holes into the Valley deposit, and this deposit is within the Rogue project. It's in the southeastern part of Yukon. Various companies over the decades have poked around in there, but nothing particularly special was ever found. It's all within the so-called Tintina Gold Belt, a group of rocks that have been intruded and that create these so-called reduced intrusion-related gold systems. These are basically where the intrusion, an igneous body, comes up into these sediments. In this case, it's the Selwyn Basin, and then it parks there, and it develops these sheeted vein systems that, depending on the spacing, will end up having pretty good bulk tonnage gold. And it'll also sometimes seep into the surrounding sediments where the heat has hornfells them, creating a kind of aureole around it. And they found a spectacular discovery that changed everybody's expectations about what the Yukon is capable of. Now, we've seen big high-grade intrusion-related systems such as Pogo, discovered in Alaska. That's an underground mine system that's high grade, 10 million ounces. But the more conventional ones are ones like the Fort Knox system in Alaska, which Kinross operates. But this one, when they've delivered their resource estimate in I think it was June of last year, it came in at 157 million tons of 1.45 gram per ton gold for about 7.3 million ounces. And that was based on 28,000 meters of drilling. So last year, they did an additional 24,000 meters of drilling, and this is what the new resource update is going to be. Now, this is going to be an important transition point for Snowline Gold Corp, because the way these intrusions are and the way that maybe the mineralization extends a little bit beyond the intrusion, with this amount of drilling, they will have pretty much sorted out the limits of this system. To find more gold within the Rogue project, they're going to have to find other intrusions, test them, such as the Gracie, where it appears to be a deeper buried intrusion, where they've been trying to figure out where that is. So to make this more, they need to find additional mineralized centers within the project. So this means they will likely be shifting into the terrible part of the Lassonde curve, which is the feasibility demonstration trough later this summer. And that's where you do very detailed infill drilling. You do tectonic drilling to figure out the pit slopes, all this tedious type of stuff. And that's usually where the market loses interest. They are going to be starting off with $50 million of working capital, so they're in great shape with regard to that. But this is also an ideal time for somebody to approach them to make a buyout offer. And the question will be for the market, there's three things really that could potentially happen to the summer in terms of how high will it go. Obviously, the first thing is how many more ounces at what grade will the resource estimate add to the Valley deposit? Is it going to double to 14 million ounces without sacrificing grade? I think the market would really, really like that, because that makes it truly world-class, and it might even interest the big majors such as Newmont or Barrick. However, those producers at that scale are not yet interested in ounce-in-the-ground type projects such as this, and the Scott Birdall and his family probably aren't interested in selling out in a cash bid, because that's the only type of offer the Barricks and Newmonts of the world make to a ounce in the ground type project, and that would mean an instant tax hit and no participation in the upside. So what we're really wondering, if the stock can go any higher while it's in this feasibility demonstration trough, it really depends on where gold is going. Right now, the institutional and retail audiences are still fearful that, gold's hovering above $3,000, but just give it time. It'll be back below $2,000. We think that's a higher probability than it going higher. We think it's a better probability that Bitcoin goes to $1 million. So we're not going to touch these types of stocks yet. Until that inflection happens where people accept that $3,000 gold or higher is the new reality, there's going to be a reluctance to embrace these non-producers. The big producers are doing really well. Now, another thing that could kind of hurt the company as opposed to help it is what is going to be the ongoing attitude of the bureaucrats in White Horse, who are all federal employees, and the First Nations. Last year we had the Victoria Gold disaster at the Eagle heap leach pad, which collapsed and didn't really cause a huge amount of damage, but the potential for damage, it was there. There was a lot of concern. First Nations were very worried that the environment was, vulnerable. And of course, right now there's an investigation going on as to what caused it. And ideally, we would like to hear that there was some sort of engineering error, which with more care and attention and awareness of this type of error would never be repeated in the past. Another potential outcome is that there was some sort of human error, maybe pushing the envelope, trying to make things happen faster. There's always the cranky shareholders demanding better production faster, so maybe some corners were cut and somebody will end up being blamed. Again, that's a fixable problem. The worst potential outcome is they have no explanation why this heap leach pad collapsed and spilled its pregnant solution into the local creek system. And there's a third factor that could affect all of this. It's that the appetite for this type of pre-feasibility demonstration project, the management might want to not really be exposed to possible negative blowback from First Nations and White Horse not really wanting mining in Yukon, and this is where, like Scott Birdall, he has about 40% of the family company that owns 27.5 million shares. That they're sitting on $200 million worth of paper profit, but you can't really do anything with it. So one of the concerns here is that what if you watch your paper wealth shrivel as all these other things potentially go wrong? You have no liquidity. Why not seek a cash out opportunity? Now, Crescata had a position of 10.3 million shares in the early days. They're below the reporting threshold, so we do not know what their status is. There is a individual called Anna Maria de Gubbins who owned 16.1 million shares at one point, who was a big supporter. She's below the reporting threshold, so we don't know where that stock is. And then B2 Gold, which came in 2023 with a 9.9% stake, it's also below the reporting threshold, but it keeps exercising its right to stay at 9.9% with each financing. So I estimate they own about 15.7 million shares. And so B2 Gold would be the obvious one to make an offer that is a diversified company that gives liquidity to the Birdall family. Everybody gets to cash out, and you could participate in the upside. However, B2 Gold is probably not the favorite company because they have heavy exposure to Western Africa, where countries like Mali and Burkina Faso have had these coups backed by the Russians, and where they are changing all the rules with mining. So B2 Gold wouldn't be their favorite company to end up paper with. That's tax free because you're getting paper rather than cash. And who knows what the upside would be if that project were to, all these other projects in Africa were to end up in limbo. So there is, however, a company which has a somewhat similar problem as Snowline Gold Corp, and that is Haldane Gold, which operates the Fruta del Norte project in Ecuador. It has a Canadian $10.5 billion valuation right now, and not an undeserved valuation. They produced 502,000 ounces last year at an average grade of 10.5 grams per ton from an underground mining operation that averaged 4,600 tons last year. They've boosted that to expanded it to 5,000 tons per day this year, and the revenues were almost 1.2 billion US, and from that the Ecuador government collected about $280 million in taxes and royalties. So this clearly is a very successful operation. For those who may never have heard of Fruta del Norte, it was discovered in 2006 by a Canadian junior called Aurelian Resources. And it had raised about $20 million for exploration in Ecuador. It had blown through $19 million without accomplishing too much. And they drilled what is probably the best Hail Mary hole ever drilled. It was geochemically blind, but based on a well-thought-out structural target. And that ended up delivering what they call an intermediate sulfidation epithermal discovery in early 2006. Within 6 months, the stock had gone from the 60-70 cent level to a peak of $43, where it had an implied value of $1.6 billion Canadian. And the stock subsequently split 4-for-1 in 2007. And they delivered a initial resource of 58.9 million tons of 7.23 gram per ton gold, which was about 13.7 million ounces gold. But they delivered it just before the bad news that in November 2007, the people of Ecuador decided to elect as their new president Rafael Correa, who was a U.S.-trained leftist who came under the sway of the anti-mining lobby and proceeded to change the constitution and change the entire mining law itself. And the problem was the Ecuador in the eastern side of the Andes, where it slopes down into the Amazon, that's where all the oil fields are, and there had been abuses. So there was a lot of anger about this foreign exploitation of raw materials. Ecuador had no mining industry up to that point, so it wasn't even an issue of the mining companies doing stuff bad or keeping too much of the money. But nevertheless, they imposed a moratorium, and everything ground to a halt. And in 2008, while all hell was breaking loose with the financial crisis, Kinross made a friendly paper bid, and they ended up issuing about $750 million worth of Kinross stock, which of course subsequently ended up worth a lot less, to acquire Aurelian Resources and its Fruta del Norte project. They did do a pre-feasibility study, but in 2014, by which time gold had tanked back to $1,100 after running to as high as $1,850, Kinross decided it would not proceed. And then by the end of 2014 and in December, it decided to sell the project to a Haldane family-controlled shell for US $240 million. And the Haldane family went in there. And they, of course, have international experience through companies like Haldane Mining and multiple discoveries that they've had in the past. And they went in there, they did a feasibility study, they worked with the various stakeholder groups, and the government negotiated a tax and royalty deal. And by 2020, they had this in production. And they have been replacing the resources so that at the end of this year, they had 22 million tons of 7.8 gram per ton gold, which is about 5.5 million ounces. And they had about 9.4 million ounces if you also include the measured, indicated, and inferred resources. So there's anywhere from 10 to 15 years of mine life left at 5,000 tons per day. They are mounting very aggressive regional exploration programs to try and see if there are more of these high-grade intermediate sulfidation epithermal systems to be found. And they're now debt-free, and they're paying a US $1.20 per share dividend. So everything's going well with this company. What could go wrong? Well, it is still Ecuador. So the company's entire valuation hinges on the stability of a country that does not have a history of stability. And we now have new sources of turmoil with the United States alienating everybody that they possibly can. And that sets into motion turbulence in South America, where China has a foothold and is only more than happy to expand its foothold. You never know what sort of political changes there will be, and somebody decides, oh, you're making too much money on this, so we're going to change the rules on you. So this is a vulnerability that Lundin Gold has. Now, at the same time, Scott Birdall and the rest of the shareholders of Snowline Gold have a similar vulnerability. It'll be like 5 years minimum before they're in production. They have to do all the permitting stuff going on. There is volatility in terms of whether the First Nations are going to embrace development in their backyard or what's going to happen at the federal level. Fortunately, Trump's attack on Canada is starting to unite Canadians and thinking, oh, we are not our own enemy. The Americans are our enemies. We need to work together. We need to develop our resources. And frankly, the people in Whitehorse who have always imagined Yukon as a summer park destination for American tourists, if Canada ends up annexed by the United States, they're not going to be too excited about all these people coming from super hot places like Texas and Arizona, fleeing the summer heat to go in the endless summer of the Yukon, where the sun never quite sets during the summer, and then boss everybody around because at that point everybody is a conquered Canadian. There are no First Nations or non-First Nations Canadians. They're all conquered people. So there's hope that, we're actually going to make our resource development work. And if the Lundin Group came in there after the resource update is out, and we pretty much know what the valuation limit for this is, they do a paper deal, acquire Snowline Gold. It cashes up all the stakeholders. The Birdall family ends up with a secure investment that's tax-free carried forward. And of course, the Lundin Gold Group, they're going to keep building. Ron Hostine will continue to build this company. They'll do other acquisitions. If they have this foothold in the Yukon, they can acquire other projects. We now have an exploration boom where people say we have these intrusion-related gold systems. They're much better grade than we ever imagined them to be in the Yukon. So we're going to look for them. We're going to probably find more. So the Yukon could become a major gold mining district with somebody like Lundin Gold expanding its footprint, balancing its concentration in Ecuador, and using its extensive experience with indigenous group, because they have to make all the indigenous group in the Fruta del Norte area happy, feel like they're part of something positive, and also keep the government happy, making sure that all the revenues, their share, the taxes and that flows to them. So if this happens, I think it'll be a good development. The Lundin family already has a foothold in Fireweed Metals, which has the McMillan Pass zinc deposits to the southeast of the Valley deposit. So by now they must have some familiarity of how the Yukon works. So this is pure speculation on my part. I have no special inside track. I'm just looking at two companies that have been very successful, but that have a missing piece that by putting them together, it helps solve that missing piece. And of course, it would be great for the favorites and bottom fish in my collections that are exposed to Yukon, because if something like this happened, it would send a signal that Yukon, and both at the federal government level and at the First Nations level, are open to business. They will support mine development, and these juniors who have been cash starved because of this endless bear market will suddenly have money thrown at them to go and check out these reduced intrusion-related gold system targets all over the Yukon within that Tintina gold belt.
In what way might a buyout of Snowline affect KRO Favorite Sitka Gold?
There's only one way a buyout of Snowline Gold Corp would affect Sitka Gold Corp, and that would be through recycling of profits that Snowline shareholders have if they, say, end up with either cash if it's a major such as Barrick or Newmont, or a company like Haldane Gold, which has offers them paper that's reasonably secure. And of course, Haldane Gold is not going to go up, many times. It'll go up more gradually, even if we end up in a major secular gold bull market. So you would see partial selling of these positions that people now view as reasonably secure, and reinvesting in plays that have lots of upside. Now, right now, based on 341 million shares fully diluted and a sort of almost 50-cent stock price, the RC project of Sitka Gold has an implied value of 169 million, which is just over a tenth of the $1.4 million value of Snowline Gold based on the Valley resource. And we could see that, depending on how the update comes out, we could see that increase 50 to 100% from there. So that means there's lots of upside. Now, what Sitka Gold has is so far not the same thing as the Valley deposit. The Valley deposit, that's an open pitable resource we're talking about with underground mineable grade. So that's what justifies the high valuation of Snowline Gold. But last year was a very important year for Sitka Gold. In January, they updated their Blackjack resource. Before that, it was 900,000 ounces at 0.83 grams per ton gold. When they updated it on the 21st of January, it came in at 2.3 million ounces for both inferred and indicated, and the grade had gone up to 0.98 gram per ton, and they managed to achieve this 160% increase using a 0.3 gram per ton cutoff grade compared to the 0.25 gram per ton that they had used for the earlier estimate in early 2023. Now, this is an open pitable resource for 74.6 million tons. And until last year, they were pretty constrained as to where they could go. They had another 500,000 ounces nearby in the Eiger intrusion. This is the Blackjack intrusion. But they had this 11th hour miracle last year where they acquired the Clear Creek claim, which sits in the middle of their package from Victoria Gold the day before the Eagle heap leach pad collapsed and pushed Victoria Gold into bankruptcy, where that Clear Creek claim would still be sitting now while they try to figure out what to do with that mess. But the big change that came in market perception was when they released hole 68, which was pushed much deeper into the Blackjack intrusion. Again, this is also reduced intrusion-related gold system play, and it started coming up with Valley-type grades. So this one hole, it was 678 meters of 1 gram per ton gold, but the bottom 93 meters was 2.57 gram per gold, starting at about 589 meters. Now, that's beyond the open pitable limit in this area, so this would have to be underground mine. But this type of grade is very easily underground mining, even in bulk tonnage terms through block caving, and that's when the stock started getting market interest, because what we see in that valley, which was so unusual for the Tintina Gold Belt, at least on the Yukon side, we're starting to see this now here at the RC project. And the RC project is in an area of much better infrastructure than the Rogue project, which is in southeastern Yukon. This is to the west of the Keno Hill district, which has been in operation for a century for its high-grade zinc, lead, silver veins or zones, and it's now operated by Hecla. There's roads there. There's lots of infrastructure, so much easier to develop. And oddly, when they boosted the resource estimate in January, the stock actually went down. And the perception was, well, okay, now there's nothing going to happen until the summer. We're in a data flow dead zone. But on February 20th, Sitka Gold Corp said, we have just started a 30,000 meter fully funded program. Because last year they managed to raise enough money so that they kick off this year with $14 million worth of working capital. And last week, on March the 18th, they reported visuals for hole 75, the first one that they have drilled, and they pushed it to a depth of 716 meters, and they reported observing 130 instances of visible gold, and this is like true visible gold, not some tiny speck every meter or so, which you need the little hand loop, the loop to actually see. And these were spaced out in this 347 meter to 605 meter segment, about 258 meters. And it's drilled in a location where this zone is about 17 meters to the northeast of hole 68 that they pulled last year. And this suggests that there is, with reasonable volume, a high-grade mineralized core to the Blackjack system. We don't know what the limits are. They're drilling hole 76 now. It's from the same location, same direction, but at a steeper angle to see how deep they can push this in this area. So this is what the market is now looking at. And last year, they also had to break through that. Once they got that Clear Creek transaction finally, moved over, they started drilling on the Roscoe intrusion. And this is an intrusion that had seen exploration in the past, but it wasn't particularly exciting what they had encountered. And they started getting really good grades at open pittable depth. So there's the Roscoe intrusion that they can go back to later in the summer. So now they have opened up multiple fronts to keep growing it bigger. They don't yet have the big sort of valley type deposit, the blob, where you just sort of start crisscrossing it and delineate a resource. They're going to have to do it more in these multiple locations and put it all together. But it's in a location where will be much easier to develop than, say, where the valley deposit is on the Rogue project. So what difference will it really make? I think if there were a bid for Snowline, it would create more cash in the system, but I don't think it's even necessary for that to happen. People can see what's emerging. They see gold at $3,000 plus. That makes sort of the grade needed for underground mining much lower than it has been in the past. So there is potential for the Sitka Gold's RC project to just grow and grow all year as the company starts drilling and producing results. And having started in late February, most companies won't start drilling in the Yukon until June. So they have a head start on everybody else to flow data, and that's why the stock has now finally woken up after its early January slump and is now bumping its head at 50 cents, and it will probably be, barring some other little bottom fish making a spectacular discovery, it will probably be the best performer amongst the Yukon juniors in 2025.
How might takeover activity affect KRO Favorite Silver North Resources?
Well, Silver North Resources owns the Haldane Mountain project, which is to the west of the Keno Hill district, now operated by Hecla. Over 200 million high-grade silver ounces have been hauled out of Keno Hill in the last century. Almost nothing has been hauled out of Haldane Mountain, because it actually is a mountain. It's been much more deeply oxidized. It has not been scraped away by glaciers to expose the sulfide, so it's been more difficult to explore. Yet it's a potential partial mirror image of the Keno Hill district to the east. And last year, Silver North Resources, I tried to raise a bunch of money in the beginning of the year, did not have much success, went in there with a tiny budget in August and managed to intersect a high-grade silver plum on the main fault, which was not really understood as being fertile. So now they not only know that it's fertile, but they've got a location where they have this high-grade zone. And the way these Keno Hill deposits work is you have the fault structure, which itself is not filled with any sort of mineralization, but where there are jogs, sort of cross structures within the main fault, that's where you will have seen the high-grade silver, lead, zinc mineralization show up. And the trick is to find where they are. Well, they got lucky last year and 2 holes intersected it, so they'll be able to go in there and start drilling this. Now, somebody taking over a gold project, intrusion-related gold system, that has no implications for a high-grade underground mineable silver project. This project is really as potential future mill feed for Hecla Mining, which has to keep its mill fed. It's underutilized. With 200 million ounces already hauled out of Keno Hill, they have to go deeper and chase these new zones deeper. And the interesting thing about the whole Keno Hill district was when Alexco took it on, they sold the silver streaming royalty because they figured as it got deeper, the silver grade would decline while the zinc grade increased. So it was almost going to be kind of a zinc mine with a silver byproduct. Well, it turned out that was not the case. The silver grade is just as good at depth as it was in the shallower workings where it was mined in the past. So something like that would be also the case at Haldane Mountain, because all of this stuff is related to major intrusive activity. The gold intrusion-related system that Banyan has, all of that is farther removed from the main engine that created all this stuff than the high-grade zinc, lead, silver stuff. It's even farther removed. So everything is sort of connected, peripheral. So Silver North Resources, they were at the Metals Investor Forum in Toronto. There's an excellent backstage interview and their presentation, which really maps out the story, which I recommend people check. They were hoping to get a higher stock price as this year goes on, even though silver is $33 an ounce. The retail market's still not really jumping into the juniors, so they have bit the bullet. They're doing a 15 million unit financing at 10 cents with a full 3-year warrant at 15 cents. So that's 30 million shares dilution, but they will have the money in place. I understand that 3/4 of it has already been spoken through, so they hope to wrap it up quite soon. And from what I've heard, it's all kinds of silver bug type people who are lining up to take a piece of this financing, because they can see that with silver looking like it wants to break out, with this partial mirror image underexplored because of the peculiar geological history of Haldane Mountain, they can see that once they get going and they start delivering these 500 gram per ton plus silver intersections, people will buy this little Silver North Resources Junior, and they will be able to finance so that they can intensify the drilling, because with drilling off these types of systems, it's a lot of grid type drilling to vector in on where these high-grade zones are, then delineate them, build the resources in little 20 million ounce increments, and get this thing up to a critical mass where Hecla says, okay, enough of that. We're going to acquire you and make you part of our future Keno Hill long-lived mining operation.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.